Welcome to Business Reporter's Future of Insurance campaign. I'm Alistair Greener. Stable, profitable and successful are the adjectives that describe the finance and insurance industries 20 years ago. Today, in contrast, increased competition, a complex regulatory environment and uncertain markets are defining the state of these sectors. How can organisations survive with these challenges? With us today for some advice are founder and CEO Roland Bürgi and head of marketing Daniel Trzesniak of Systemorph. Good morning.
Morning.
Good morning.
In their everyday work, how do CFOs and CEOs, how do they experience growing uncertainty, regulatory pressure and so on? How are they dealing with that?
I think the main difference is the speed in which they have to deliver information. I still see that currently very often it's very difficult to produce reports, so they have to literally do a data call in the entire organization. It takes 2-3 weeks to assemble all the information from everywhere, and this time is simply no longer there. So they have to be much quicker. Data needs to be available at the fingertip, and they need to be able to answer questions even if they were not anticipated.
And what are the internal weaknesses that make them vulnerable and slow to respond?
Currently the whole exercise of collecting the data within an organization is quite complex because there's a lot of manual work involved. So it's people sending files around or spreadsheets and then collecting them, trying to assemble them together and trying to bridge this gap between the data sources. As an alternative, you could also integrate your systems, but that's not a very easy task because in order to do that, you have to develop your own data language, which is not just a language naming things the same, but actually people having the same understanding and using this language consistently. So if you can achieve that, then you can have this whole process automatically.
Looking at this lack of common language, could you give us an example of how that then impedes progress by not having it?
Well, it starts really with a human language. So all the international companies typically use English, but they use the same word in different meanings, or they use different words but mean the same. And then sometimes you literally have a situation like in the Tower of Babel. So everyone speaks English, everyone tries to say the same, but you don't understand that you mean the same. And so there is a need to actually align this kind of language.
I can bring an example from the insurance industry. So, for example, the policy administration systems, they have to refer to certain code tables, like a list of countries, like lines of business or currencies, etc., etc. So if they use different codes for actually this data, then you have a problem when bringing the data together. And as Roland said, sometimes in data set you have, for example, the premium definition. So what's premium? And for one department it might mean something, and for another it might mean something completely different. And sometimes you also have the information of premium being called different by different departments. So you have the two sides of the coin.
You talk about different departments there, and one of the big things is departmental integration is still challenging despite the emerging technologies. So what's standing in the way of this integration?
It's a good question. I think corporate environments are still very reluctant to change. They like to do things the way they have always done them, the way they have known how to do them. And what we can see is that nowadays the business people, they actually need something quicker. They need something more agile. And they don't have these huge budgets anymore. They don't have these long time frames anymore. They require the change. But very often the organization is not able to keep up as of yet. And very often there are very conservative people who say, but we have always done it this way, and that's why we want to continue this way.
What they need there is really a revolution, how they actually develop software and produce data.
Therefore, there's clearly a need to integrate. So how do you go about it?
Well, what we see is that very often integration is first attempted on paper. So there are many companies drawing up diagrams or writing long prose texts on how this integration can be approached. But what we notice in practice is that all these paper towers then fall apart when you implement them in practice. So what we promote, and this is essentially the revolution that Daniel mentions, is to completely reverse the way that projects are done. We want to deliver software within literally single days, maybe single weeks, and essentially have the business user always look at working software. So no theoretical views on theoretical diagrams, but actual clicking around, figuring out where the problems are, giving immediate feedback, and then within a couple of iterations we can achieve very high quality data models and software solutions.
Yeah, we should bring the data really in the beginning. And in there you can see that people trying to actually do their work, and they will give you immediately feedback on what you have to change on your data model and how you should structure things. And just by trying to imagine these things in paper in advance, I mean, the probability that you make a mistake or something that you forgot to add is quite high. And you don't want to notice just in the end of the process. You want to notice that early on and take corrective measures for that. I mean, we have a case that we actually did that, and we let all business people play with the application, and they will give me immediately feedback if something was not properly done, or didn't fit here, didn't fit there, or was too complex. So I got, in a matter of days, very rich feedback, a very immediate feedback from people that actually work with the data. And they didn't have to imagine diagrams and how these things actually talk to each other. That was our job. And at the end of the day, we had a model that we could quantify, we could tell them exactly how good it was to actually do what they were expecting.
Thing is that every organization will be using legacy systems already. So how do you go about integrating a legacy system with a new one?
Yes, it's obviously always the case and always necessary. So we typically recommend to do it as a staged approach. So at the beginning, it's usually very difficult to touch the legacy systems. So typically we would wrap them with a layer to make them integratable, where we essentially compensate for anything that these systems cannot do. However, this wrapper is then difficult to maintain, so then we actually recommend that in a second or third stage this approach is revisited and that it's reconsidered whether the legacy systems might be changed or even replaced.
Another thing to think about is this report from the Chartered Insurance Institute, who said that 40% of brokers are actually concerned about AI, machine learning, effectively making them redundant so they'll lose their jobs. Is that true?
Well, we surely think that there will be a shift in terms of the job profiles. So if you look at today's job profiles in this entire reporting space, there are a lot of people involved doing actually not very productive work, because they need to bring all this data together, make all the data fit, and this is actually a job that the computer might be doing. So we think that this kind of job profile will disappear at some point, but then usually the business content at the moment has almost no space, because such a lot of time is used up to just assemble the data. And then you have only very little time left to actually do the content and create decisions. So we think that this ratio will shift. So the people doing business content, they will be more and more in demand, whereas the people who do essentially this data work, they can be replaced more and more by computers.
And you see, this always has happened throughout history. I mean, you can see, for example, copy machines. So before people actually had to hire, 100 people to copy a book. And then the copy machine came actually by pressing a button. Everybody could have a printer at home that could print pages and pages of every book. So there was a shift of these people doing manual work to actually using the technology. And I think with data management here will be the same. So there will be a technology that will cover all the needs that business people have right now, that is currently being done manually by copying things around, by trying to adjust one piece here to see if it fits there. And what will emerge then is that these jobs will probably disappear, and jobs with that need more decision making and people doing analysis on the actual data will then remain.
It's almost like a revolution of data. And as such, I'm interested to know how Systemorph gets involved and how you provide a remedy for this.
I mean, it's really a revolution, because I think the industry needs the revolution. And when talking about revolution, there's a definition in technology of what the revolution means. So we're talking about orders of magnitude. We think that we really have to bring software to business people in a matter of days, so they can actually take their decisions. As Roland mentioned in the beginning, we need this decision. There's market pressure. There's the need of actually slicing and dice data in all kinds of dimensions. So you cannot have static things that don't move. So it has to be adaptable. These things have to be living and change very rapidly to adapt to new situations.
The issue here is that you're dealing with an industry, the financial services industry, which is pretty conservative. And your name, by its definition, almost Systemorph, sounds like there's intricate transformation taking place. So how do you respond to people who say, well, actually, we're not quite ready for this change yet?
Actually, the change becomes more and more a necessity. So first of all, there is the cost pressure. So these 2-digit million budgets have disappeared. 3 years development time horizons have disappeared. And actually, people need the solutions much quicker. So we notice that the business actually pushes for it. And we also notice that the business is less and less ready to accept costly, clumsy systems. And, you know, like in their private lives, they use very modern solutions. They have modern technologies, and the discrepancy between what they use at home and what they use in the office becomes bigger and bigger. And we see that the business is pressuring to get also modern technology, nice-looking technology, fast technology. As they have it at home, they want to get it also in the office.
How do you measure success in this environment? And for that matter, can you quantify a return on investment?
Yes. So obviously in every pitch we do, we have to quantify some total cost of ownership over, say, a 5-year time horizon. And there you have to literally compute each and every pound that you are going to spend in the next 5 years. And this can be easily also compared to other solutions. So typically in the current environments, having internal infrastructure is difficult to compete to cloud environments. Internal operations departments are difficult to compete with companies that are really specialized on hosting cloud solutions. And there is quite a direct cost comparison that can be done. But obviously there is then the big money, which is the money you can lose if you do bad decisions because your database was simply bad on which you have taken the decision, or the data quality is completely unknown and you don't know how to take the decision. And if there you take a wrong decision, then the financial loss can literally be almost any amount.
Yes, and I fully agree with what you say. So I think data is actually the most valuable asset a company has, because it will bring information for people, or even these new technologies, making educated decisions about strategy, about the future of the company. And this will bring them value, because if your basis is not solid, you cannot quantify how good the data you have is, then you end up making bad decisions.
We're talking a lot about the change that's taking place within the financial services industry. Let's fast forward a little bit to, say, the next 5-10 years. Where do you see this change going? What are the trends that we should be looking out for?
Well, we definitely think that the trend is going in the direction of full end-to-end solutions. When I look at how it currently works, you have team 1 developing the software, you have team 2 operating the software, you have team 3 maintaining the software, and team 4 supporting the software. And the customer has to coordinate all of this and deal with all the inefficiencies in all these departmental boundaries. And we believe that business users should focus on their business. They should not necessarily have to learn how to build software solutions or how to do software projects. And we believe that we have to give them full end-to-end solutions, including everything, so that eventually they just get their log on, they can start using the software and can focus on their content.
Yes, I think most of the financial institutions, their core business is not developing software, but they have to do it because they need very specific tools actually to run their business. They don't want to do that though, because they should focus on what they're good at. And I think the tendency is actually this tailor-made software process will be then outsourced and offered as a service. I think that will be the future.
Change is definitely on the way, and for any organisation to succeed and to be agile and to achieve what you've been talking about, they're going to have to change. And as always, it's very interesting to see how technology is very much a part of that. Roland Bürgi, Daniel Trzesniak from Systemorph, thank you very much indeed.
Thank you for having us.